But please understand that my next target on the downside is 12,000 to 13,000. And I don't mean to scare anyone. This is just what the charts are telling me. It's my job to just tell you guys what the charts are saying. So if you think about cryptocurrency and Bitcoin, it could mean that Bitcoin not only is headed to 12,000, but lower.
Welcome to Dream Richer. Do you think Bitcoin's price will go lower or start rising? According to Gareth Soloway, Bitcoin is yet to hit lower lows. This means that many other crypto coins will also continue to reach lower prices, since most of them follow Bitcoin's price action. If you have been following the cryptocurrency market, you might have noticed by now that every time Bitcoin's price goes down, the prices of altcoins also follows them. The opposite is equally true. When the price of Bitcoin rallies, we expect altcoins to go up in price shortly after. One of the biggest reasons for this is the fact that Bitcoin is the pioneer of the industry. As such, it has cemented itself as a sure store of value, increasing its popularity to astronomical levels. Because of its pioneering status, investors often consider Bitcoin as the reserve currency of the cryptocurrency market, similar to the USD in the global stock markets. By the end of this video, Mr. Gareth unravels the dark future that lies ahead for Bitcoin and crypto market at large. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
I talked about Bitcoin heading down to 20,000. The main reason I thought it needed to get there is because that was the 2017 high. We've been seeing a lot of the dot-com-ish type stuff. For those of you that don't remember the dot-coms, it was basically crypto, but for the internet, right? The internet age was just dawning in the late 90s. Stocks were going up, from 5 cents to 20 cents to $1 to $5, just like a lot of cryptocurrencies did. And Amazon, by the way, was one of those stocks that just had an amazing move up. But just like with crypto now, the dot-com bubble collapsed, and a lot of dot-coms got wiped out. They went to zero, and a lot of them also were bought out for pennies on the dollar by the likes of the bigger players out there. So the same thing is going on here in crypto, and that's one of the calls that I've made going back to last November, is that we have to see that flush out. Part of that reasoning is just simply, if you look at how many cryptocurrencies there are like 20,000. There's no way that we can have 20,000 cryptocurrencies. It probably should be 50 or maybe just 20. So you have to flush those out. We've seen Celsius kind of get to that point of being almost insolvent. We've seen other cryptocurrencies like Terra Luna basically collapse. So it's in the process. The one thing I would say is if you look at this chart, you should get a technical bounce here. Now, this is the important part here. So I am calling for a technical bounce back to about 25,500. And then if that's able to be eclipsed, you have upside to about 28,000, maybe 300 to 400. And I also think that just like you have people that were pumping religiously at 68, 69,000, you also have them on the other spectrum now saying, oh, it's going to zero, there's no worth here. And the honest answer is it's usually somewhere in between, right? So I do believe in cryptocurrency. I think Bitcoin is a fantastic way to get around the printing of the Fed, to get around inflation, to basically have a currency that you can transfer very quickly around the globe. So I'm a big believer in it. I think that once it bottoms out, it will have a run.
In the words of Gareth Soloway, what we are seeing now is very similar to the dot-com bubble. The notorious dot-com bubble, also known as the tech boom or internet bubble, was a period from about 1995 to about 2001. During this time, internet-related tech companies attracted a massive amount of attention from venture capitalists and traditional investors. This influx of money, combined with the exploding popularity of the internet in general, caused the web sector to expand rapidly in terms of valuation, despite many companies lacking concrete paths to profitability. Eventually, around late 2000s, these streams of easy money dried up and the industry imploded. This caused many tech companies to go under and ushered in a new bear market that would last for around 2 years.
So if you think about cryptocurrency and Bitcoin, it could mean that Bitcoin not only is headed to 12,000, but lower. But my bigger point is look at that in relation to where Amazon went, right?
Wow.
So now see that little M pattern back there?
Yep.
Right over here?
Yep.
And then look at where it went. So I really do believe that cryptocurrency, as it matures as an asset, will eventually start behaving much like Amazon. And that means there is massive, massive upside. You just have to weather the storm. We have to get through this kind of bubble bursting, and then the best will survive. Gold is fantastic. It's something you can hold in your hand. It's been a store of value for thousands and thousands of years. Bitcoin eventually will mature into something like that. And the benefits of Bitcoin is that you can send it very quickly. If I take out a piece of gold or an ounce of gold, very hard for me to send that to my family in some other country. So there's a place for both of these. There's the one you can hold, and then there's the digital one where you can send very quickly. So I think that the Fed, they're meeting later in July, I believe, towards the end of the month. They'll tighten by another 50, maybe 75 basis points. I think they're trying to kind of front load because they know the economy is going to come to a screeching halt. I think that they're trying to bring inflation down with all their might. But my guess is, yes, it will come in, but they're basically going to force the US into a recession. And that mainly could mean that you see the whole world enter into a recession as well. So that's my biggest fear here, is that the Fed has always played from behind, right? They played from behind in 2008, 2009, not starting any sort of quantitative easing till 2009. And even in COVID, they kind of were a little late there. But when they came in, they came gangbusters in. They always have a tendency to go too hard and be late. So they're trying to play catch up. And I think that this is that situation where, yes, I think interest rates need to go up, but doing it this quickly, you are sending a shock, especially when commodity prices are already hurting the market. Inflation is already hurting the consumer. Now you're basically causing the housing market here in the US to come to a screeching halt and start to decline, many, many other things. So my only concern is that they're doing it too quickly to try to get back in front of the situation, and that could ultimately cause a recession.
It's clear from Gareth Soloway's explanation that Bitcoin will see brighter days, but will first follow a similar price action of Amazon in the dot-com bubble. This could mean that Bitcoin dips down to as low as $12,000. It's always difficult to identify a single catalyst that causes the bursting of an asset bubble, but in the case of the internet bubble, two factors seem to have played the biggest role. The first factor was rising interest rates, and the second factor was the onset of a recession in Japan in March of 2000. We are seeing these two catalysts become more and more predominant in today's culture as well, where the Feds are talking about raising interest rates and a potential recession is strolling around the corner. Do you agree with Gareth Soloway? Let us know in comments below. To watch the latest crypto news, watch these videos here.